What happens next? The answer to that question has not felt this uncertain for a long time because it has truly been a tumultuous, frankly at times shocking period in tech over the last few weeks. It feels as if decades have passed in mere days. And I want to start by reflecting that and talking about that with the most brilliant panel. We have over here Cory Doctorow, one of the generation's great science fiction writers, a blogger, an activist, and someone who knows his software. A long time ago, he founded a peer-to-peer networking company. We also have Amber Gadda, a serial Web3 entrepreneur. What does Web3 mean? Well, we'll talk about that later. And also exec chair at Decentralize, the first in real life and metaverse music festival. And hopefully behind us, in the screen, it's working. In the screen, we have Chris Kelly, and now an investor who was the 25th employee at Facebook, as it was known then, where he was head of privacy. So a really fantastic panel to discuss this question, what comes next? I want to start by asking you all the same question. In the last few weeks, what has surprised or shocked you most? Of all the things that have happened, what has truly surprised you? Chris, what about you? What was completely unexpected of all the things that have happened?
I mean, I think that the radical change inside Twitter is probably the biggest surprise of the week, and the fact that it would go from it's a central town square for the world to will it work tomorrow? It's a pretty big set of questions, and I think it probably will certainly work tomorrow. I think it's still going to be an impressive town square for the world, but the massive cutbacks and the sort of chainsaw that Elon Musk has taken to the company, it doesn't bode well for its future, and I think that's a huge surprise to Chris, especially journalists.
Because you're a Silicon Valley insider, really. You, I think, invested early on in SpaceX. You knew who Elon Musk was, but you were surprised by what's happened.
I mean, I think that he should have taken a much more measured approach to the way that the company was taken over, and in a variety of ways. I mean, look, I as I've said, publicly, I'm mostly an Elon fan. He's able to do some pretty amazing things, but he's gotten into an area that's well outside his depth, and and thinks that a kind of bullying management culture can change it, and that's just not working right now, and it's not going to work at a Twitter. I guess I would hope that somebody who has had such amazing success in other areas would take a more measured approach, and that just hasn't happened. So that's why I'm surprised by it. I mean, I've certainly seen some driving management moves from Elon at Tesla and SpaceX before, but I'm surprised that this was the approach.
Okay, thank you. Amber, what about you? What's surprised or shocked you? I mean, you must have been pretty shocked when FTX, for those who don't know, FTX is a cryptocurrency exchange, a little like a bank. This is not a good analogy, but a little like a bank for cryptocurrencies. Why do cryptocurrencies, which are meant to be totally decentralized, have things like banks? Why indeed? But anyway, this entity has completely imploded in the most dramatic fashion in the last few weeks. And as someone who works in this space, I mean, I was shocked. You must have been stunned.
Well, to be honest, this story started back in May of last year when we started having one of the cryptocurrencies, algorithmic stablecoins, supposedly, that failed. And it showed that the centralized, decentralized finance system is very fragile and very weak. And it showed basically that there was a huge contamination in the space back in May, and we were expecting to see more fiascos coming through. I must say, I was surprised that FTX went bankrupt for the simple reason that I would have assumed, so I spent my career in investment banking, the founder as well. So
you were at JP Morgan, I think. You know this space. So you know that, say, taking billions of money from people and then giving it to an investment vehicle to put into more crypto projects and keeping no liability, keeping no money for yourself. It's probably not a good idea, right?
It is what is really, really frustrating for me and other people in this space is that what we saw in crypto, especially in centralized, decentralized finance, is that people are making the same mistakes that have led to the financial crisis of 2008. Like, the same mistake. It's like you did not learn for the mistake of your older brothers and older sisters. And what we saw in FTX and in other lenders, CDFI lenders, is that there's no counterparty risk management, no risk management, no internal controls. And basically, if the regulations that were created after the financial crisis of 2008 to limit the power of the banks, the power of the hedge fund, and create more transparency in the system were applied to these crypto companies, we would have had, maybe we would have had the same fiasco, but it would have been less shocking than what we're seeing today.
So just really quickly then, you're a Web3 entrepreneur and you want regulation.
I want regulations, yes. I want smart regulation, but I want regulation, yes.
Okay,
definitely.
thanks.
Yeah.
Corey, what about you? I mean, on one level, right, is any of this surprising? Elon Musk has behaved like Elon Musk. A completely unregulated space has gone kaput. You've been, a prominent and very strong critic of big tech and crypto over the years. Were you surprised? Were you all the same? Were you shocked at what just happened?
So I think that big tech's hype machine wants us to think that they're evil geniuses. They want us to think that they've figured out how to hack our dopamine loops and make addictive technology. But when you look really closely at what they do, they just have monopolies, right? What they've got is like a platform that they got all your the people that you love and care about and want to transact with or go on a date with, and they've locked them into a silo. Whenever anyone tries to build technology that lets people out of the silo, when Facebook started, it had a little bot that you could give your login and password to. It would go to MySpace and get your waiting messages and put them in your Facebook inbox, and you could reply to them and push them back out to MySpace. So you didn't have to choose between the people you loved who are on MySpace and the service that was better, which was on Facebook. You could get both. And today, if you try to do that to Facebook or Apple or Google, they just reduce you to radioactive rubble. And so, what they've done is use access to the capital markets to build these big impregnable silos, to buy everyone who wants to compete with them. Mark Zuckerberg gets up in the middle of the night and sends an email to his CFO saying, young people hate Facebook, they like Instagram, we have to buy Instagram because, quote, it is better to buy than to compete. Right? This is the kind of thing you absolutely don't want to put in writing. It's like saying, let's do a murder and premeditate it and make sure that we premeditate it because we know murder is wrong. Right? It's just not something you want to write down. And it's probably not a coincidence. A couple hours later, he sent a very wooden follow-up email, presumably after an angry phone call from his general counsel that said, for avoidance of doubt, I think competition is great, and I only want to buy Instagram because I think they will benefit and we will benefit from it and we will produce synergies. Really, what he wants to do is keep you hostage. So the thing about these services that are based on hostage-taking, mutual hostage-taking, they're holding you hostage, you're there holding me hostage, is that hypothetically, they can unwind as fast as they wound up. Right? If the reason you're there is that someone you love is there and that person leaves, then it's easier for you to go. The switching costs leave. And so, we've seen these very precipitous declines. Friendster, MySpace, 6 Degrees, here one day, gone the next. The founder of our feast today, Rupert Murdoch, turned a lot of money into a very small amount of money by buying MySpace, the way that Elon Musk is on track to doing with Twitter.
Although, but on the recent events, I feel like because we've gone all the way back to MySpace.
The thing that surprised me was how quickly this thing that we knew could happen, but which it seemed like the laws of gravity had been suspended for a decade, and it seems like very quickly people are going, I don't need Twitter and Facebook as much as I used to think I needed them. And now that the people I love are leaving, maybe I won't spend as much time. I know that Twitter views are up, but I think they're up in the same way that like people crowding around a burning building to watch it go down. That building is seeing more footfall. It's not really the same thing as your business increasing.
Okay. Right, I want to bring in Chris here, because Mark Zuckerberg, right? But just before I do that, a reminder that you can pose questions to our brilliant panel by scanning the QR code on your seat, or if you're watching on TV, submit your questions on Twitter using the hashtag BigIdeasLive22. Chris, Mark Zuckerberg, evil genius, out of his depth man-child, monopolist. How would you characterize him?
So look, so much of this is a battle for attention, and that is competition in a number of different ways. It's a battle for how do you get users to actually pay attention to your platform and use it to communicate with others. And there are a number of different platforms that have deep sets of information on that in iOS and Android and Facebook and Instagram and in quite a number of different ones, the controlled by phone companies and other companies that compete with each other for user attention over time. So I, as a trained antitrust lawyer, I represented Netscape against Microsoft. I've been in this, and certainly from a traditional definition in antitrust law, there aren't monopolies here in a lot of different places. There are bottleneck controls in things like iOS. I think at one point maybe you could have argued that Facebook, had that type of control over people in certain jurisdictions in Canada or in the U.S., but they certainly don't now. And so it is this sort of war of all against all going on in technology, and I think ultimately that's competition. I do think it's pretty stunning how fast these things can unravel, and that's one of the things that I think that this Twitter situation shows this week is that you can kind of step on this in a number of different ways, not quite accidentally, but you don't want to mess with it, as precipitously as Elon has with Twitter.
Thanks, because I think that Corey's raised a really interesting point here. I opened the panel by saying the future felt incredibly uncertain. But look, if we've got a bunch of monopolies that are very hard to escape from, is anything really going to change? Chris, in a strange way, I feel like you're saying that things could change.
Competing with each other, that's not a monopoly.
Okay, so in a way, so you're saying that you do see the possibility for quite extensive change ahead?
Oh, absolutely. I think that there's robust and wide open competition for user attention among different media networks, and I think that that's pretty exciting.
And Corey, yeah, because what do you think about that? Because are you saying that?
Free side of this, which I think is also quite fascinating, and the number of different networks that you're seeing Mastodon and Post and quite a number of these networks spring up as Twitter has its problems.
So go on, Corey, and then I want to bring in Amber on Web3. Yeah, just as you've raised, Chris.
I mean, I think that there's some uncertainty about terms here, and so we heard that from a traditional antitrust perspective, we don't have monopolies. The tradition that is referring to is a 40-year-old tradition. It's the consumer welfare tradition that was brought in by Thatcher, Reagan, Mulroney in Canada, where I'm from, and it represented a complete break with the century of antitrust law before. The first antitrust law in the United States was passed by Senator Robert Sherman in 1890, and he was very clear that the problem with firms was not whether they competed or not, it was whether they exercised power over your life. He stood on the floor of the Senate and he said, if we would not allow a king to rule over us, I had to take an oath of loyalty when I became a British citizen, but I don't think we should have a king to rule over us. If we would not allow a king to rule over us, we should not allow an autocrat of trade to rule over us either. That when firms are able to, even though they're competing among each other to see who can abuse you in the most novel way, when there isn't sufficient competition that you can arrange a non-abusive relationship. Like Apple, for example, if you opt out of all Apple tracking, you may have seen those ads, iPhone means privacy, that are all over the place. You opt out of all Apple tracking, Apple still tracks every tap you make, everywhere you go, all the accelerometer data, your IP address from place to place, all of your location data, everything you open, all of that is still tracked, but they don't sell it to anyone else. They just use it to target you for ads.
And
they call that privacy, right? So where is the competition among Google and Apple? You can get any flavor so long as it's Orwellian, right? Well, okay, what if you want not Orwell flavored? That's much harder to come by.
Okay, so but Corey, just to pick you up on this, right?
That's fascinating right now, the development of this in the Web3 environment.
So Corey, just to pick you up on this, you said that people are leaving Twitter in droves.
Yeah.
I mean, but you can't, isn't the point that you can't really leave a monopoly? How does this work?
Well, so they're leaving Twitter in droves, but they're still keeping one foot in because it's very hard to get away from it. What they're mostly doing is they're abandoning the relationships that they had. So many of you will have seen the musical Fiddler on the Roof. If you haven't, I'm about to spoil a 60-year-old musical for you. It's a musical about people who live in a shtetl in Poland, and life is bad, and it gets steadily worse, but they can't leave because they love each other. And if they go anywhere else, they will be broken up and they'll lose each other forever. After things reach a kind of fever pitch, again, spoiler alert, they all leave. The village becomes a ghost town, and they go to lots of different places, and they lose each other, right? It's a very funny, poignant scene. I'm going to Chicago. I'm going to New York. Why are you going to Chicago? My brother-in-law lives there. Oh, that'll be nice. No, I don't like him, but family is family. It's a great scene. Good musical if you get a chance to see it. But the lesson here is that if you cannot bring your community with you when you go somewhere else, the fact that whether we call this a monopoly or market power or a market failure doesn't really matter. We all understand that what it is it's excessive corporate power that adversely affects us in our daily lives in important ways, and that these are not like the great forces of history bearing down on this moment to create that excessive market power. It was forbearance for mergers, predatory pricing, predatory acquisitions, conduct that was historically prohibited under competition law in the EU, in the UK, and in the US, and that for 40 years we pretended wasn't in the law books. And what's happening now is there's a shift. We have the Digital Markets Act in the EU, and so on.
So Amber, right. Web3...
May I just jump on a couple of points that the gentleman
tell me what you think about this, because Web3, in a sense, the marketing at least, is that it was designed to solve this exact problem. Can it do that?
So just let me just go back on the other point, please. So I just want to look at it more from an economical perspective of what is big tech facing today. So there's the current economic environment, there's the requirement from users for more data privacy, and then there's competition from new entrants targeting Gen Z and Gen Alpha. When I'm talking about the economic environment, what does that mean? I'm taking you back to 2008. So in 2008, you had this huge financial crisis that led central banks into a quantitative easing and bringing rates to zero. So you had tons of money on the floor or in the market. That money was supposed to trickle down into the economy to create activity and create consumer inflation. It never happened. What we saw is that that money started flooding into venture capital firm, private equity firm, and public equities. And so we were in a situation where money was so cheap and it was so easy to invest that we created this this inflation in asset prices, an asset bubble, literally. A lot of it went into it was small tech at the time, or medium tech. A lot of it went into tech companies. The investors did not care much about the basic of finance, looking at a bottom line, looking at profitability. The investors cared about growth. Everyone was talking about growth, generate more growth, have more users, have more revenues. No one thinking about the bottom line. Where are we today? We have rates that are up. We have central banks that are actually tightening. So access to money is actually more difficult. And suddenly now investors are telling themselves, hold on a second. I need to start looking at my bottom line. I want to invest in companies that are actually profitable. And so this psychology of revenues at any cost is starting to escape from the market. Where does this leave big tech? So big tech has been used to crazy valuation, has been used to a lot of cash, spending a lot of cash on hiring a lot of employees on projects that worked or didn't work. Today, they need to restructure. They need to start focusing on the bottom line. And they've been hit quite hardly. And this is why, in terms of stock prices, they are the ones that have decreased the most.
And so in practical terms, then, does this mean that essentially what we're going to get is the same, but maybe a bit less luxurious? Or is there a technological revolution coming along which can actually answer the deep-rooted questions that, say, Corey's been raising, for instance, that you can't take your friends with you when you leave Twitter?
So there is a disruption in the way, and we're still at the very, very early stages of it, and we're all making mistakes and stumbling and standing back again to build that, what we call that Web3 space. But before talking about Web3, maybe it's good to take a step back and try to understand where Web 1, Web 2, Web 3 position themselves versus one another. So back in the 90s, Web 1 was fully decentralized. It was free. Anyone could host a server. Anyone could use a computer to relay messages between a server and a browser. So you started having people building applications on the internet. But in order for these applications to be able to communicate with one another, to be able to become more scalable, we started inventing standards. So one of the easiest standards to understand that I'm sure everyone knows here is HTML. It's your web page, right? You could use any browser to read a web page. That browser could be called Netscape, Firefox, Chrome, etc., etc. But the flip side of this standardization was that, as Corey said, user could take their data and move anywhere they wanted, move through the platform. And so big tech, who were still small tech at the time, were like, all right, I need to keep my users locked in. So they started creating standardization for their own application to lock in the users. Why did they need to lock in the users? Because we were during the internet boom, and there was a lot of money as well flooding into these companies. And what people were thinking about is number of users. They didn't care yet about how to monetize these users. What they cared about is having an increase in number of users. And then suddenly, these companies, well, their investors were telling them, guys, we need to generate revenues now. All right, how do I generate revenues? At the time, none of us...
Advertising. Yeah, you assemble a community.
Let me finish.
Sell them ads.
Advertisement.
That's the model, right?
Hold on, because there's a justification for advertising. At the time, no one would have accepted to use a credit card. We're talking about 2000. To use a credit card to pay for a subscription on the internet. That was like super risky. And so the product had to stay free. You needed the product to stay free. And so these companies were like, all right, I have a lot of data here. I have the behaviors of my users. Let's go for advertising. And this is how big tech started becoming very siloed, or big tech, Web 2.0 basically, started becoming very siloed and focused on data tracking and data selling. Now, during this period of time in the early 2000s, something very important happened. There was an application that was called Napster. Does anyone remember Napster here?
Okay, yeah, but Napster was a free music service.
Yes, but it was a centralized music sharing system.
Technology.
Yeah.
And so Napster, because of the drummer of Metallica, Napster was sued for copyright infringement, and Napster got shut down. And this brought about what we call the Nutella protocol, which was the first decentralized peer-to-peer file sharing system, right? And that was the basic, or that was the fundament, in my opinion, to what would become Bitcoin at a later stage, and what would become Web3.
Because I think the question is that are we going to see truly decentralized services that actually have a truly different business model to big tech in the way that, for instance, Napster had a truly different model than, say, whatever replaced it. It was iTunes and Apple Music that actually replaced it. Chris, you're an investor in this space. Look, right now, Web3 feels like a PowerPoint slide. Sorry. Go ahead. Web3, is it real?
Yes, it's very real, and it eventually replaced iTunes. Eventually replaced Napster, but it took quite some time. And there are inevitably going to be a number of centralization points where standardization happens. I think that Web3, and particularly with the expectation of public blockchains being the basis for a lot of the operations, means that decentralization can be relatively well protected over time. There are battles over privacy in that space inevitably about one of the great powers of a blockchain is its mostly public nature. But you still want a number of things for people to maintain privacy around, and sometimes centralization springs up to feed that need, and sometimes centralization is then abused in a number of different ways, as it has been in FTX, and in some of the other kind of exchange collapses over time. But the fundamental idea of a cryptographically provable, trustless technology underpinning a lot of this space, I think, is an incredibly powerful idea, which will continue to come to the fore over the next 5 to 10 years, and ultimately be the basis for so many of these systems. We are heading back towards a more decentralized internet in that way.
Corey, your thoughts?
So I think that there are elements of sort of blockchain ideology that are decentralized. I think that when you build a new internet based on the idea that you solve problems with creating markets and everything, and then the speculators gamble that they can make those markets and create and extract value from those markets by being the exchanges or by holding a plurality of the tokens or what have you, you do create some decentralization. But what I'm afraid of is that all evidence has been that the decentralization you create is you still are in a world run by 25 billionaires, but now they have 1,000 banks to hold their money in. And that is more decentralized than 25 billionaires hiding all their money in 4 banks. But what it hasn't done is decentralize power. And that's the most important thing here. So whether we're talking about proof of work or proof of stake, to a lesser extent, the cryptographically secure protocols that use secure enclaves, you are still ultimately producing winner-take-all economies where you have increasing concentration of wealth into a few hands. And so what that means is that wherever you try to make a decision that reflects the will of the polity and things that are good for the polity, it always has to be measured against the outsized influence of people who can buy a lot of power. We see that in the real world, and we see it in the virtual world, that it's very hard to make evidence-based policies. You say we want good policy. It's very hard to make good policy when there are people who can just sort of Bigfoot good policy with very expensive AstroTurf campaigns, like what we saw during the passage of the GDPR and subsequently during the enforcement, where the firms involved just keep saying the privacy is not something we should have, and if we have a law for it, it shouldn't be enforced.
Okay, I mean, GDPR did eventually pass. Amber, I saw you nodding during that, but can Web3, whatever it is, if it's created, can it escape the trap of centralization or the difficulty of centralization? Is it realistic to think about a decentralized future, and why would we actually want that?
I mean, this is why we're working every day. Are we there yet? Definitely not. Nothing is decentralized, purely decentralized yet. And one thing Corey has highlighted very, very correctly is that a lot of these blockchains and a lot of these protocols are actually very centralized in the way they are governed. So they are governed based on the amount of money that you have in the protocol. Your vote is equal to the amount of money you have in the protocol. So where is the voice of the little people that we're supposed to hear? Still not here.
So look, we're all nerds on this stage, right? And we love debating centralization and decentralization, exactly, the fine details between them. But to everyone out here, why should they really care about decentralization when, let's be honest, is that most decentralized platforms are harder to use?
Fully agree.
What's your elevator pitch to everyone in terms of decentralization, the appeal of it?
Well, so 2 things, or actually 1 thing. When we had Web 2, the user became the product. The product was free. The user became the product. With Web 3, including blockchains and blockchain protocols, what we want to do is let the user become the owner of the product. And this is what we're working towards.
And do you think people really care about that? Because I feel like that the massive evidence is that people...
You'd be surprised
Okay.
how much people now care about big entities controlling their data, controlling the information. Why do you think Apple decided to stop or to allow its users to opt out? They smelled the fire before anyone else smelled it, and they decided to allow their users to opt out and have this label of privacy friendly. So yes, users do care about that, especially the Gen Z and Gen Alpha, and you'd be surprised.
Okay, we'd love to hear your thoughts on this. Reminder, you can submit questions if you're in the room, by scanning the QR code that should be on your seat. Or if you're watching online or on TV, please let us know. Do people actually care about privacy enough to sacrifice user convenience? Use the hashtag #BigIdeasLive. So Chris first, because I saw you nodding, and then Corey. We've got a lot to get through, so let's go briefly.
The idea that there doesn't have to be a trade-off over time, and this is one of the areas where having development based on open protocols can be incredibly powerful, is that you can build systems that aren't entirely centralized, that you have a lot of control over. Historically, because the economic incentives are there to control them and then manipulate them in some ways, and you can, whether or not you think that's what Facebook has done or what Apple is doing right now or what Google does with Android, those economic incentives are all there to pursue very deeply. If you start again from a blockchain-based approach, you have technical problems for a while, both in initial confusion and a lack of understanding about how to get everything to talk to each other. You have coordination problems in that there's not necessarily traditional kind of corporate organization focused on how do you build a company around this. But you've seen amazing things jump up in both in real decentralized finance and automated market makers and things like that, with Uniswap and other protocols. But you also see a lot of manipulation and over time, and that gets called out in a public way because of the way that most blockchains work. And then it gets abused in a number of different ways, as we've seen in the Luna fiasco and now in FTX. The fact that all of these things are coming to the fore and quickly, I think, is a powerful thing for blockchain-based and Web3-based technologies over time. And I think that you'll see, just as TCP/IP kind of came to the fore, just as HTML came to the fore over time, you'll see a lot of standardization on Web3 and blockchain technologies empower amazing businesses and social projects that allow people to have more control over their data.
Okay, thanks. Yeah, I mean, so just to translate to anyone wondering there, TCP/IP, for instance, is one of the founding protocols of the entire web. And it is truly open.
It's the way the computers talk to each other.
Yeah, it's the way. Thank you. It's the way the computers talk to each other, and these are open platforms. Open platforms have been incredibly successful. You might not know it, but you probably use open source software every single day. However, that open source software has often been incorporated by a company that is owned by shareholders or just by one man, say, for instance, Elon Musk. And so is it really open? Corey, because I want to get your view on this, because you've actually been involved in this movement since the very beginning. You've got the perspective. Tell us briefly again, please. Yeah,
I think
is this real?
I think the important way to understand whether you are the product or whether you're the customer is not about the business model, it's about power. Firms will treat you as their inconvenient gut flora for an immortal colony organism called a limited liability company if they can. So the thing that determines whether or not a firm abuses you is whether it's disciplined by regulators and whether it's disciplined by competitors. Some mix of those two is what causes firms to behave well. It's not that some firms are made up of good people and some firms are made up of bad people. Companies don't have personalities, right? I live a mile away from the gates of the Disney studios, and for years and years there was this story that you had Fox that had one ideology, and you had Disney that had a completely different ideology, and ideologically they could never come together. And then Rupert Murdoch flogged Fox to Disney, right? So either we're made to believe that Murdoch and Bob Iger were star-crossed lovers making goo-goo eyes at each other across the table at Davos for years, or maybe there was no ideological difference between them. Maybe all the stuff about whether Bart Simpson can tell a fart joke and Mickey Mouse can't is just window dressing.
Okay, I feel
like
we're
ideology is there.
A little off topic.
Whether Apple is going to respect your privacy,
decentralization, though.
Yeah. So whether Apple is going to respect your privacy has to do more with whether they can get away with invading it, not with their personality.
So just to summarize then, because I feel like what you're saying very simply is there is no technological solution to the question of power. It has to be done by regulation. So we can't just decentralize everything and work it all out.
So computers are amazing. Computers, every computer can run all the software we know how to run. That's the only computer we know how to make, the Turing-complete von Neumann machine. That means that you can always de-silo data. You can plug something into Facebook or Twitter, any decentralized services, and allow people to leave. What stops people from doing that is not the technical challenge. It's the fact that there's laws that these firms can deploy to punish you if you reverse engineer their code, if you violate their terms of service. If you do the things that these firms did to all of their rivals on the way up, when they did it, that was progress. When you do it, it's theft. And so, there is a regulatory barrier. There's also the potential for a regulatory aid. So in the European Union, they're mandating that companies decentralize. They're saying that you must allow third parties to connect to your service through the Digital Markets Act. So there's lots of different ways that we can decentralize it, but unless we're focusing on power, right, and not how many servers there are, how many lines of code there are, how many bitcoins there are floating out there, but how the power works and how the power is concentrated, the decentralization comes to nothing.
Okay. Right, we've got just a couple of minutes till we have questions. Reminder, please submit your questions. So I want to do a bit of a lightning round here.
Sure.
Just to get your views on some topics of the moment. Chris, very briefly, very briefly, metaverse. Mark Zuckerberg's dream of the metaverse, real or rubbish?
It's real, but not in the near-term framework.
Okay. Amber, what about you? Do you believe in the metaverse?
I do believe in the metaverse, but again, we're very early. It's very clunky. It's very ugly still. But the metaverse for Facebook, I would say it is his pivot. If he gets it right, he saves the company. If he gets it wrong, I think Facebook is going to be in a lot of trouble.
Okay, for those of you who don't know, Mark Zuckerberg has invested, I think it is $36 billion in his dream of a virtual reality world, the metaverse, and so far produced, I mean, like not a lot. So it's a very expensive bet, and he's betting the whole company on it. Corey, yes or no, do you believe that we will have a metaverse?
I think it's nonsense. I think it was created to distract us from Mark Zuckerberg's inability to have a second good idea. And so he's just trying to conjure something into existence. He's done this once before. You remember the pivot to video, where he convinced every media company in the world to waste billions by lying to them about how many videos people were watching. Now he's doing it by lying to them about the fact that we all want to be legless, low-polygon cartoon characters.
Okay.
But it all amounts to the same thing.
Second now.
Thank you. Second lightning question. Chris, will Twitter exist in a year, yes or no? Twitter, the platform, the service?
Yes.
Amber, will Twitter exist?
It will, but it may be a shell of its former self.
Okay, Amber, you...
I agree. The new subscription model is not going to please a lot of people around.
So you think it will exist, but people won't be happy with it?
It will exist, but you will have less users, that's for sure.
Corey, you?
Yeah, the future composts the past. It's not going away. You know, you can still get a LiveJournal account. Of course, we'll still have Twitter. Whether or not it matters is the important question.
Okay, and then final question. I want you to put a number on this in terms of years. How many years will it be until we see something that looks like Web3? Chris?
I mean, I think we're seeing it right now. It's the classic, Bruce Sterling line. It's like the future's already here. It's just unevenly distributed.
Okay, so 0 from Chris. Amber, you?
It has started a long time ago. It's becoming more popular now, but again, there's interoperability, clunkiness, fragmentation. So I would say between 5 to 10 years to get where we want to be.
Okay, because I've got to be honest, it feels like Web3 is 90% scams and maybe 10% interesting innovation. But I guess,
to scale, I completely agree with that. Yeah.
Yeah. Okay. Yeah. So, Corey, what about you?
You know, I'm with William Gibson, who said the future is here. It's not evenly distributed. He thinks Web3 is nonsense. And so
sorry. You got it right. It wasn't Sterling, it was Gibson. Yep.
So, you know, I think that it's not going to happen the way that they say it is. I think that it's just a kind of distraction from what's really going on in tech, which is a techlash, and I don't think you correct that techlash by adding a transaction layer. Also, as a computer scientist, I just find blockchain to be the most unforgivable nonsense. The idea that we would voluntarily do computation that we can't reverse later, that is permanently etched in a ledger, and then put billions of dollars into it in case if we made a bug, that bug can be exploited forever. And then our fix to this is to give random authorities the ability to rewrite that code that was not supposed to be rewritable. It's nonsense built on stilts, wrapped in a soft, floury tortilla.
And on that bombshell claim, before we get into the complex topic of blockchains, let's take some questions. I've got a question here from Jeff White. Jeff, are you in the audience? Stand up and wait for the mic to come over and tell us your question. It's coming to you from behind.
Cheers, thank you. Thanks, it's a really great panel. I've been watching, like a lot of people, the sort of rolling skip fire of the FTX cryptocurrency exchange. And as Amber's pointed out, the Tether stable coin turned out to be anything but stable. And yet we still have governments talking, admittedly just talking at the moment, about introducing national cryptocurrencies. And we have countries, some of them have recognized crypto as legal tender. And those two things seem to sort of lead in different directions. I just wonder what the panel think of government cryptocurrency in the future.
So
Amber, yes.
Sorry, I'll pick that one.
Cryptocurrencies.
I'll pick up that one. So there's two things people sometimes forget. CBDC, in my opinion, in the UK, not a lot of sense. We have faster payment. Yeah, we can transfer money from bank account in split seconds. In the US, it makes sense because the US payment infrastructure is very antiquated. It dates from the 60s. If you want to transfer from a local bank, money from a local bank in one state to another state, it can take up to 5 days. For the US, makes sense. For the UK, not really.
Okay.
Yeah, I think that we have to distinguish between central bank digital currencies, which are not cryptocurrency. It's just giving everyone an account at the Fed or at the Exchequer. And the one country, as far as I know, that's trying to accept crypto as legal tender, which is the melting down economy of El Salvador that is in absolute shambles and tatters. So I don't know that I would call that a counterexample. I think that it's actually just an example. Right? Don't do stop doing that. No one's gonna go, give me more of what Bukele's doing.
Although we will see, Jeff, because I think one interesting aspect of national cryptocurrencies is that it would allow a government, say an authoritarian state, to track in absolutely minute detail.
Although again, those aren't cryptocurrencies; they're just digital currencies. They're not in an immutable, decentralized ledger. It's just a spreadsheet at the central bank.
This is very true.
Right, so it's not a cryptocurrency in any sense.
So let's get another question. I think Melanie's in the audience has got a question. Ah, there you are. Thanks. If you could just wait for the mic to come round.
There you go.
Thank you.
Okay, so I was wondering, to what extent do you think the spread of fake news and increasing political polarization has contributed to the loss of users from platforms such as Twitter, and how can this be combated?
So Chris, did you hear that? This was about to what extent has the spread of fake news and misinformation contributed to disillusionment in big tech?
I mean, I do think that it continues to be a significant problem, and it was one of those things that Elon, I think, showed a particular lack of understanding of as he began the Twitter discussion and takeover, and has shown more misunderstanding of ever since. And I think that you have to be policing at the margins, misinformation on platforms while allowing a wide berth of free speech. These are complicated and nuanced issues at the end of the day, which is why so much time and effort inside these platforms is invested in it. The fact that it's become a public political football in both US and world politics is another complicating factor, but it doesn't mean that the companies can't do it or shouldn't do it. And I think that I think you've seen the Twitter ability to do that, fairly quickly decimated. And I think that's one of the things that's going to make the platform difficult to be as important as it once was.
Chris, I wanted to ask, I mean, you were at Facebook very early. You were global legal counsel, I think it was, effectively the head lawyer. I mean, how much of a role did questions of truth and misinformation and disinformation play in the discussions while you were there?
We had to deal with them all the time. I mean, we saw the initial aspects of misinformation campaigns sort of being built around elections as early as 2006 and 2008. We had actually done a number of projects to try to increase civic engagement on the platform at that time. And we certainly saw people try to use misinformation to manipulate elections early on at that phase and fought against it.
Hang on, I'm sorry, I've just got to pick this up because, Chris, you just said that you saw manipulation of elections from 2006, but Mark Zuckerberg has admitted that he didn't really take this seriously until 2016. I mean, what happened in the intervening 10 years?
The scale changed, and there were quite a number of folks who I had left at that point, actually, to engage in politics on my own, but we had definitely seen some attempts at electoral misinformation in the earlier races.
Okay, thank you. Fascinating. I just want to get, I'm sorry, guys, I just want to get one more question because I think we've got a really interesting one from Hiro Danyanani. Yeah, please. There's such an interesting question. Apologies if I mispronounced your name. Stand up and tell us your question.
Yeah, I guess it's related to the last two questions about, trust and abuse that we've seen in the social networking space. What role do you think public sector and governments can play in Web 3 or Web 2.0? And so the one example is beyond regulations, basically. So like a Mastodon server provided by the UK government, for example, as a complementary offering in the market.
Yeah, what role could public sector alternatives play to big tech? Did you know that France has a search engine? Yeah. It's true, it's called Quant, but you might not have used it. Well, yes, Corey, I know you've thought a lot about this.
Yeah.
Can public sector actually compete?
So I think that if the place where the public sector could intervene to improve the quality of our discourse is by improving the quality of our institutions. So I will tell the story as quickly as I can. I promise you it's on point. I have a chronic pain problem. A decade ago, I went and saw Harley Street Quack, and he said, you should take lots of opioids for the rest of your life because they're safer than you think they are. We have new research. And I went and did my own research, determined that the Sackler family had suborned their regulators. They didn't care who they killed, and they were selling dangerous products with fake research. I was an opioid denier. I was right, but epistemologically, what I was doing was no different from the people who questioned the quality of vaccine research. They were wrong. But the point is that unless you're a cell biologist, the only thing that you can do to evaluate the evidence is rely on what you know about the institutions themselves. And our institutions have been of very low quality. They've been extremely compromised. They've made bad calls. We've seen this in the finance sector. We've talked about the great financial crisis of 2008 and the bailouts that followed. We've seen lots of other regulatory failings where what was supposed to be a truth-seeking exercise that protected the public interest became an auction that protected the interests of the corporation that was the highest bidder. And it creates an epistemological chaos where the space for people to disagree about subjects that are important, that they themselves can adjudicate, and that creates this collapse into different spaces about epidemiology, safety, education, and so on. This just becomes a never-ending battle. You're not going to fix it with critical thinking. This is critical thinking. It's just critical thinking gone wrong.
So not direct competitors, but state institutions that can actually have more of a voice.
So private institutions are never going to fill that void of being a public interest institution that acts as a good faith referee to adjudicate all the questions raised by all the other actors in our society. That's only a thing that a public institution can do.
Okay.
And we need our public institutions to be reformed and to show themselves to be good actors. It takes a long time to win trust. It's really easy to lose it. It's very hard to get it back. If you wanted to get there, I wouldn't start from here, but this is where we are. And so we've got to start by rebuilding our institutions as high-quality institutions that act in the public interest in the most transparent way possible. That means doing things like building the Goldacre Reports platform for NHS data and not doing a contract with Palantir, which is a disgrace that this country is doing it with NHS data. We need to be acting in the public interest and not in the interests of grandees and parties and their donors.
Okay, Amber, what about you? Just quickly, because
Very quickly, I would say that humans cannot be trusted, and history has showed us repeatedly in all industries that when there is no regulation, there's always someone who's going to mess up something and create a crisis. The trouble with regulations is that they only happen after the fact. When you have a crisis in health tech, when you have a crisis in finance, this is when the regulator comes in, and most of the time they come in too hard because they're reacting to a shock. What I would see is a more softer regulation that are created hand in hand with the various industry, but as well with various ethical committees, because we lack, unfortunately, a lot of ethic in business these days.
But what about the idea of a publicly funded Uber?
A
publicly funded Uber, for instance, to compete with Uber.
Well, you know what? The trouble, again, is that it has been shown through histories that public entities perform less well than private entities. And I know he's going to say something. I know it. I feel him jumping.
My NHS card begs to differ with you.
Okay, well, on that note of passionate disagreement, may I say thank you to my fantastic panel, Chris Kelly, Amber Gada, and Corey Doctorow.